resell to get a meaningful return, it takes on average about 5 years. So you can compare the two investments and you see that the government securities, on top of being risk-free, the return is higher. Yes, so I think we're struggling with the numbers. But that's a point I wanted to bring out regarding what you earn. The other benefits, I think my colleague had touched on them. So risk-free, the governments don't default. The securities have the backing of government. It's a way to diversify. In other words, don't put all your investments in one basket. It's good to have investments in different avenues. And the government securities are very liquid. Whenever you want your money, you can approach your bank and then you break that investment. And you'll get back your principal plus the interest that you'll have earned at that point. Thank you.
Yeah, so let Madame Roslyn just give us a better, a good example about what Stephen has been trying to explain by even writing a bit. Let's go into class 101 principles.
Actually, it may not be a better one, but it is among, I think it's better we see how it works. Yeah, is it okay here? I turn behind. Another example Stephen did, when you have rentals and your tenants have left, definitely you have to put in more money. So there is a lot of, but this one, you invest, you sit back, and your money works for you. That's the beauty with government securities. So I wanted to talk about how do we get this money? How do we invest? First of all, he told us that we have two types, one competitive. Can we see properly? So one you can buy as a competitor, as we talked about. So you must be having above 200 million. Then there are those, we call them small investors, but they are not small. We have non-competitor. Okay, we have non-competitor with 100,000 to 200 million. What happens every time we want to buy? I told you we have a calendar on the website. So you go to the calendar on the web buying, and when are we buying? Assuming we want to buy treasury bills this week. When you check on the website, you find it there. You take your application to your commercial bank. You don't come to Bank of Uganda. Bank of Uganda, you come for information, finding out information, and knowing some other information about the investment. Now, this, when we advertise, this we put in the press. Information is in the press, it's on the website. Even commercial banks have this information. Or you come to Bank of Uganda, we give you the information. We have a window 14 in the banking hall where people come. So the competitive, once they see that we have advertised, for example, we want back maybe 210 billion or 185, maybe it can be anything depending on what we are seeing out there. Now, the competitive are very important in the market, as we shall see, because they determine the price on the market. How do they do it? One, the competitive will come for example, Jacqueline will come and say, government is offering, let's say 210 billion. You say this week, we want 210 billion. We have advertised. So Jacqueline will come and say, my name is Jackie. Out of 210, I want 2 billion. Let me give you a little. And I want this rate. Bank of Uganda, if you are not putting this particular rate, please don't touch my money. So we take you. Another one will come. Let me call him Obadiah. Obadiah will also ask for maybe 210 million. And we'll also ask for the rate. So, maybe let's say bank, let's say Standard. It's maybe 60 billion. Maybe Standard wants 60 billion. It takes, mind you, we told you what customers do we have? Commercial banks, individuals, corporates, circles, all those groups. So anyone is coming in. So we keep receiving these customers until our money is over. Maybe it gets over at Barbara. Barbara also has asked for 2 billion. Excuse me. Now, when we receive all these customers, mind you came through the commercial bank. When we have received all these customers, we look at who of these customers is requesting for the lowest interest rate. Who is willing to lend the government this money at the lowest rate becomes our customer number one. Am I clear? So we start giving out money depending on who of these customers. So one, let's say Jackie wanted 10. Another one, 10.1. Blah, 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 maybe we reach at 12%. So when we reach at 12%, the 210 billion is over. We draw a line, and then we call it a cutoff point. Our money got finished at 12%. So those who want 12.1, maybe 13%, our money got finished before we could reach them. So what do we say? We say these people are unsuccessful. Price, but our money got finished at 12%. Now, this cutoff point is the price that is going to everybody who has come in the market. Anyone who has come in the market, including Jacqueline who wanted 10%, is going to take at the cutoff point. So the price we give you is not determined by Bank of Uganda. It's not determined by the government. It is determined by the market forces. I continue. Now, when you are paying, we told you when you are paying and it's a treasury bill, we pay at a discount. Our customers pay. You pay less interest. How? You are going to request for a face value this face value, when you multiply it by the rate, what you get is the cost. And the cost is what you pay. Are we together? Now, assuming, let me use simple examples and real examples. Assuming I want 100 million. You come, you say, you want to have your face value at maturity to be 100 million. We shall tell you, fine. But you are going to pay us less interest that you have found there, and at this time the interest were getting it at the cutoff point. Let me assume the cutoff point was 10%. So our rate is 10. So we are going to tell you, pay us less 10%. What are you going to pay us? 90 million. Are we together? So you are going to pay 90 million, but you expect to get 100 million. So at the end of maturity, you are expecting 100 million, yet you paid how much? 90 million. So your interest is actually 10 million in 100 million. But we have not removed with less. It should be less a withholding tax, which is 20%, or 10% if it's above 10 million. That is a treasury bill. Now, for the treasury bond, we told you it is something, the features are all the same. Except for rate, you can buy at par, you can buy at premium, you can buy at a discount. But also, this par or premium or a discount is also determined by those market forces. Because the competition is so high, somebody would say, I would rather get 101 million, but I go into treasury bonds. Are we together? So, with the treasury bond, I told you we have 2 years. We have 2 years, 3, 5, 10, 15, and 20. I send it. But when we tell you that you are earning so much, for example, let's assume the coupon payment. The treasury bonds have coupon payment, which the treasury bills don't have. Okay? I told you can buy at a discount or you can buy at par. That means you are paying 100%. That is at par. Or you can buy at a premium. You are adding. And also that is determined by the market forces. Now, assuming we have bought the system is the same, futures are the same like a treasury bill. Now, we have an extra thing we call a coupon payment. Now, assuming our coupon payment for 2 years is like 10%. Let's assuming it's 10%, which is determined by the market forces, by the way. Now, when you come in the first year, we expect to give you 10%, but we are not going to pay you this 10% at a go. We are going to see the first year, we are looking at your 10%. Every 6 months, we are giving you 5%. Another 6 months, we give you 5. At the end of the year, you've made 10%. Are we together? We go to another year. The second year, we do the same. We pay you 5. Another 6 months, 5. At the end of the year, you've made 10. So in 2 years, you've earned 20%. That is how it works. You've earned 20%, yet you've been paying you every 6 months half of the coupon. Am I clear here? But remember, it is less. 20% the interest on interest. But if it is 10 years and above, it is less 10%. So you can invest your money, you sit, your money keeps working for you. This interest, the withholding tax, the coupon we are paying you, It is up to the individual. Some individuals decide to keep their money, they keep reinvesting it. It comes, I'm not ready to use my money. Let me put it. I want to use my money whenever it comes. I want to do. Someone would say, I want to take half. So it is up to the individual to decide the way you want to use your money. So this is a very good investment where you invest and your money works for you. But first of all, you must start saving that money, because you cannot invest something you've not saved. So after you have, for example, if you have gotten your NSSF benefit, you can put it somewhere in a government security. It starts making money for you. You start earning. Either you eat it, you build it, you anything. That's
maybe, Rosalind, if I can just get a real example there. So if we're looking at the NSSF benefit, there's an example of someone who got their benefit and decided to put up a big house, which unfortunately they did not complete because the money was not enough. So it may not be wise for you to put all your benefits, say, in constructing a building at that age. On the contrary, if you had put the money in the government securities, you see that you have a payment. So the example we looked at, you have 7 million in a year, so that should keep you going. So liquidity is very important, after retirement. You don't want to tie up all your money, even midterm access, by the way, you don't want to tie up all whatever you've got in one investment. So the government securities offer an alternative investment that is very liquid, and then you'll get periodic investments. On the treasury bill example that Rosalind has given, so the face value is the amount that the government will pay you. If you're using the 1 year treasury bill example, after the 1 year, government will pay you 100 million. That's what we call face value. But what's the amount that I will pay now for me to get interest that will take it to 100 million? So that's the 90 million. Today, when I approach my bank and I say I want to invest in the 1 year treasury bill, they will debit my account with 90 million. So the 10 million is the interest, is the return for me lending my money to government for 1 year. So that's the interest payment. Hope that clarifies further.
Thank you very much, Rosalind and Stephen. I think a lot of questions that have come in, so I suggest that we deal with them at least for the next 30 to 40 minutes, because it's quite a lot, and I would like for this discussion to have a better impact, to have more impact to our audience. I know you touched on this, but is there a special, is there a critical advantage if I invest through that primary market, the auctions that you spoke to, compared to me going through the secondary market? Are there any benefits in that regard?
Sorry, as an individual?
Yes, as an individual.
Okay, so
Gerald is asking. Gerald Balitwaula is asking.
Thank you, Gerald, for your question. So the primary market, that, like we clarified, is restricted to 7 commercial banks. We call them primary dealer banks. And those were selected on a certain criteria by the Bank of Uganda, based on how active they were in the market, etc. So the primary market, when we announce in the press, like Rosalind mentioned, when you see the auction being advertised, we call it an invitation to tender. The participants that come into that auction are the 7 banks, the primary dealers, who then now on sale in the secondary market. It's like if there's a primary market for, I'll use the example of tomatoes still, like we are only 7 who can access from the farmers when they offer the tomatoes. So we go there, 7 of us, we buy, but there will be so many people who are interested in the tomatoes. So if I go and then sell to other people, that is the secondary market we're talking about. So for individuals, they no longer come into the primary auction. It is these 7 banks that sell those securities to whoever is interested to buy, and also for whoever is holding to sell to. So the secondary market is for buying and selling. The point we talked about, how the government securities are liquid. So it's that secondary market that you go to when you want to sell your investment.
Okay, thank you, Stephen. Roslyn, I have several people asking, once I have invested my 100,000 in this treasury bill, can I make a top up if I get another 50,000 or 100,000? Can I keep adding?
Definitely, thank you for that question. Whenever you have invested your money, anytime you have something, you keep investing. For example, we have people who have their goals. I want by December, I should buy this land. By December, I should have finished my house. So you start your goal, maybe within 5 years, short term, long term. So you start investing, whatever you get. If I'm earning my salary every month, if I have my business every week, I want to keep putting this, or every 2 weeks, because we are buying 2 weeks. So you are allowed to keep investing every time. Thank you.
Okay, and Stephen, Samuel Omoko has a question here. Could you tell us what the interest range looks like? He's under the view, or he has a perception that interest rates can be very minimal, yet there's a withholding tax. Could you help him clarify on that?
Thank you, Simon. So maybe start with is that the fact that the government securities are risk-free. So there's a link between risk and return. The return is not really low, as we will go into, but I'll use the example of money lending. The risk of losing your money there is very high, but you see some of the exorbitant charges that are being charged, 15-20% per month. But it's a factor of risk. Government securities are risk-free, so and if you get your NSSF benefit, the last thing you want to do is invest it in very risky, because that's the last major flow you have basically. So if they default, then you might struggle. But the returns are not really low. The example you put up there, the returns are really competitive, even after taking off withholding tax. And we did use some comparative examples of the rentals. There are other alternative investments, chicken business and so on. But there's an element of risk. So for the chicken business, you know what could happen. You could lose all the chickens. For the rentals, we already mentioned the experience from COVID, how household incomes were hit hard and, people struggling with the rents. So there's also a risk of default there. So there's that element. But the returns are competitive. We had the PowerPoint there, and we were showing the current returns. On the 20-year bond, it's as high as 15% per annum. And you see the profit at the end of it there. Like on the 10-year bond, we've just used 210 million because I was using that to compare with the example of the rentals. But the profit at the end of 10 years, you see, is 257 million. So what you'll get at the end of 10 years is you'll have got coupon payments every 6 months, and then you'll get the 210 that you invested in the first place. So these are really competitive returns. And maybe if I can just take it a step further, we do analysis. We look at what the other countries are paying, because every country, like we said, issues debt, and you see where they're paying. And in the region, our returns are really high, and that's why we've seen. So when we talked about who can invest in the government securities, one of the categories was the offshores. So there are fund managers and people who manage funds, and they're always looking out for which country has the highest return. And we've seen very strong growth in what they hold here over the last 2 years, which is an indication that our yields are very strong. But there are also other considerations. So what you earn may be eroded by inflation. So one of the things we are credited with is maintaining inflation relatively stable. The medium-term target is 5% inflation, and so we are not very far from that one. So compared to other countries, we've seen, for instance, Ghana, where inflation is very high. You might earn this money, but then the purchasing power is low. So the actual return, is not that high. Then there's also a factor of the exchange rate, at least for the offshores. So it's a consideration for them. The Uganda shilling rate is very fairly stable, because if it depreciates, then it will erode their return. So that's another consideration. In other words, when you compare around the region, the yields on the government securities for Uganda are relatively competitive. Thank you.
And Stephen, I'll still stay with you. Lots of people are asking, you're talking about, the rate on a 20-year bond. Is there a place that they can find this information to keep track of where those interest rates are?
Absolutely. I should have mentioned that. So on the Bank of Uganda website, we do provide, maybe Jacqueline will provide those details. We do publish a yield curve, which is basically the guide of where the yields are at the moment. So that can guide your decision when you're looking to invest, because like we saw, yields keep moving and they're influenced by different factors. It could be, like she mentioned, a factor of demand and supply. If there's so many people interested in the auction, then we tend to government will get the money at a relatively lower rate. But on the Bank of Uganda website, we do publish the yield curve, which shows how much is being paid from the 3-month Treasury bill to the longest tenor, which is a 20-year bond. So that acts as a guiding for those looking to invest in the securities. And we have historical information there, including for all the auctions that we've had. So we'll provide the details of how to navigate to that site.
Okay, thank you very much, Stephen. Rosalind, this is going to come to you. There's someone who has a very interesting question here. Lydia is asking, what will happen if the investor dies before maturity? Can the next of kin access this money? What is that process? What does that process look like in brief?
Thank you very much. Thank you, Lydia. It's a wonderful question. In the event that someone has gone, which is normal, we keep your investment. We wait for powers of administration to direct us where your money should be. So you can never lose your money, Lydia. I think I've answered.
Okay, thank you very much. There's plenty of questions. I don't know, maybe I'll still stay with you, Rosalind. What happens in case the primary dealer I've selected closes? The primary dealers, you mentioned they are commercial banks. So what happens in case the primary dealer that I have selected as an individual closes business? What would happen to their investments?
Exactly. You know, you use the primary dealer and your money is passing through a primary dealer. Your money is not going to stay on the primary, it is coming to Bank of Uganda. So don't get worried, your money will be Bank of Uganda, in Bank of Uganda, and when it matures, it goes back. In any case, Bank of Uganda is supervising these commercial banks. No customer should lose money at all. When the bank is closed, definitely our customers, they are our customers. We take care of them. So you shouldn't worry about that.
Okay.
Maybe an addition to that. So like Rosalind has mentioned, much as we've gone through your commercial bank, these securities eventually are held into what we call a central securities depository system, which is at the Bank of Uganda. So we're able to see, even when customers request for their statement, it's that system where the statement is generated and they're able to see what they hold. So everything is centralized at the central bank.
And for clarity, Stephen, on that point, how do I access that CSD account? Am I able to maybe use my phone and just keep track of how my investment is growing? Is that how it works?
Rosalind, you want to take that?
You can, first of all, after you have purchased your treasury bill As Stephen said, money comes to Bank of Uganda. Now, you can come for your statement, or you get it from your commercial bank. And we said when you need the money?
No, it was really about tracking.
Tracking.
Yes.
Yeah.
When is my next coupon payment?
Exactly.
Yes.
When you buy, you must come and take your statement. We have customers who are purchasing every time. We have Treasury bill, we have Treasury bond, they are coming in every time. So after you have purchased, we do a settlement on a Thursday. On a Friday, you come to Bank of Uganda, we can give you your statement. You can go to your commercial bank, you get your statement. So you follow it up. Maybe I came to a commercial bank and I was late to invest in government securities. They have not, but in your heart, you know you have done it. And when you come, you find your money still on your account. What do? Ask for the statement. And request to your commercial bank, please help me invest my money. The other time you didn't. So every time, that's why we are telling you, keep track of your investments. Go to the commercial bank, find out, come to Bank of Uganda, get your statement, or your commercial bank, they give it to you.
Okay. Thank you for that, Roslyn. Williams is asking, I'll stay with you, Roslyn. Can I just walk into Bank of Uganda and open up an SCD account?
Oh, thank you, William. No, you can't, William. You must have an account in a commercial bank. First of all, these commercial banks know you. They know who you are. So you are coming to us through the commercial bank. So you can never come to Bank of Uganda to invest directly, but you must pass through a commercial bank having opened up a CSD account. Thank you.
Okay, thank you, Roslyn. Stephen, William Worodria has another interesting one here. How do Treasury bills interest rates fare against inflation?
Okay, that's an interesting one, Williams. So I did mention that inflation was a factor in terms of what you earn. So for individuals, you may not be that sophisticated to take into consideration inflation and so on. So you may need advice, and I should have mentioned that there are other people who can invest on your behalf. So we have unit trusts, basically people who collect funds from individuals and so on and invest on their behalf. So they are fairly more sophisticated. They have fund managers who will track, different things and know the right time when to invest and divest and so on. But inflation is key because it will, like I said, the actual return you get. You may think you're earning 15% when inflation is eroding the purchasing power. So whatever interest you earn, eventually you'll go out there and buy things. So if the prices are so high, so basically the purchasing power of what you've earned is low. So if inflation is high, so if I'm coming into the auction, I'll say, well, when I get this money back, it may not be worth so much. So I require a higher return to compensate for what inflation is eating away. So that's another key. Inflation here is relatively low, so it's an attractive investment destination, especially for the offshores. But now for even Ugandans, now you know that the government securities give a very competitive return. Thank you.
Thank you, Stephen. And maybe for the benefit of our audience, I'll just emphasize to them that there are direct ways where you can invest in government securities, which is the process that the panel has been emphasizing on. So you have to walk into a commercial bank, or you already have a bank account with a commercial bank, and you go through them to directly invest in government securities. But there's also an indirect way through which you can invest in these instruments. He spoke about unit trusts, which pull different funds together and go to the market, work with professionals. So one of the reasons why we exist as Sbg Securities Uganda is to help you, one, guide that investment, your investment process, your investment decision, especially if you want returns that will ensure that you're beating inflation. We are professionals, so we ensure that you are allocating, and we ease that process that was described by helping you and guiding you on your investment journey. I will carry on with the questions that we have. Madam Roslyn, Innocent wants to know, can they invest 2 million shillings for 5 years at once? You mentioned the minimum is, I think, 100,000.
Yes, Innocent. We told you you can invest even if you have 100,000 Uganda shillings. So if you have 2 million, it's good to go. You can start there and then, anytime. And between the way, before it has matured for the 5 years, you get something else. As long as it can make 100,000, 200, 300, in multiples of 100,000, you can always keep buying, adding on your investment. Thank you.
Okay, thank you. Stephen, I'm going to pose this to you. A lot of people have been expressing concern about when they buy their bonds at a premium. Are you able to help me break down what that means and what that implies?
Thank you, Salma. I think I did touch on it a bit. So what it means for a bond to be at a premium is like where we started from. The price is determined by demand and supply. So if so many people are interested in the bond, then the price, Rosalind illustrated. So the price is determined by the different bids that come in, and so if there's so much interest and it's competitive, so the price is going to be high. So what it means for the bond to be at a premium, if 10 million, and initially to like anything that's priced, really, you have to pay higher for it. So if I'm going to get that bond, I might have to pay 12 million. So you realize initially you paid 2 million more, but then the coupon payments you get, after a few installments, you'll have recovered your 2 million, and then now you start making profits. So, but as we saw in the example, at the end of the whole period, overall you'll have made the profit. But it's the point of entry that the price is slightly higher because the demand is so high. So that's what makes it a premium bond. Thank you.
Just for clarity, I do not lose money.
No, you'd not lose money. So 10 million is intact. It's just the interest now. But that interest, so the 2 million you paid initially will be covered by the interest, and then you start to make a profit as the interest accrues. So you don't lose money. In the end, you'll make a profit.
Thank you, Stephen. Madam Roslyn, Mulinda Yahaya is asking, can an investment club invest in government securities? And what is required to do so?
Oh, thank you, Linda. An investment club it's also a group of people. Once you've made your club, you can invest. But at least you must choose representatives. You must have your account in a commercial bank. Then choose representatives, because if it is more than if it's a group that is more than 2 people or 1 person, that means you need representatives to represent you. Maybe 2 or 3, so they can open up an account and then they are ready to buy.
Thank you for that. So I'll stay with you because Audrey has a question relating to what you had already spoken about. The money that they keep adding. You remember how you mentioned that if I have invested my 100,000 shillings and I get another 100,000 shillings, I can still add that money. So Audrey wants to understand this money that they keep adding. Does it start on its own, say the 2-year journey, or does it boost the initial investment that they had the other time at the start?
Yeah. Audrey, thank you very much. That's a wonderful question. When you invest your money, for example, I start investment today, I put in my 2 million. 2 weeks down the road, I get 100,000, I put. It is going to mature differently. Whenever you put your money, it is going to mature differently, but it is adding up on your account. So when you come to get your statement, it will have a total of how much you've invested, when it's maturing, when you invested it, when the interest you earned, fine, like that's how it works. So it doesn't mature at the same time, but it makes a total.
Okay. Stephen, David Chitio is inquiring, is there a best option to consider when buying government securities? Whether is it at par, premium, or discount? Is there anything that's better, much better?
Thanks, David, for the question. So it depends at the point you want to invest and how much money you have. So for a discount, you'd basically you'd pay if you're looking to lend government at maturity, say 10 million. You'd upfront, your bank will debit you, say 8 million. So if you have less money, then you can invest. For a premium, where the demand is high, you'll have to part initially with a slightly higher cost. So it depends on how much money you have to invest. And for par is, if you're going to get 10 million at the end of it, so you're going to put in 10 million. So the timing of investment really is partly due to individual circumstances in terms of your cash flows, but also it's when you get in, it's a fact of the market conditions at the moment. So in the current environment, and we've seen for at least for some time, most of the Treasury bonds are at a premium. In other words, the demand is so high, so initially you part with a slightly higher cost. But as we saw, as you start to accrue the interests, by the end of it all, you make a profit. I hope that answers.
Okay, thank you, Stephen. I'm still going to stay with you. Does the CSD account hold both the Treasury bills and the Treasury bonds? Martin is asking.
That's right, Martin. So all these government securities we've talked about, there's one central system at the Bank of Uganda where they're all held. So all the Treasury bills and Treasury bonds are held in that central securities depository system.
Okay, thank you for that. Madam Roslyn, I think you mentioned one of the benefits of investing in government securities is that they can be used as collateral for a loan. Martha Atieno is asking, how much would you have to save for security in order for one to qualify for a loan?
Thank you, Martha. Different commercial banks have different guidelines. So you can talk to your commercial bank and see, but I believe any amount of money you can qualify for a loan as long as your money is there. Let's say Martha has 50 million and is in need of 20 million. You are going to get your 20 million and you leave your 50 to move. So it's a matter of negotiating with your commercial bank.
Maybe if I can add to that, what Martha has asked. It goes back to what we are talking about the fact that the government securities are liquid. In other words, whenever you want to sell in the secondary market, you can go out there and sell. So it's not just individuals, it's even the bank that's giving you the loan that's taking on the securities as collateral. So the fact that they are liquid, the bank knows if your securities are worth 50 million, different banks will have different guidelines, but you're probably going to get very close to that amount, because they know that if you default, then that security can be sold fairly quickly in the market, because the market for the government securities is very liquid.
Thank you very much, Roslyn and Stephen. I see some questions that I have the capability of responding to, so just to give my panelists a bit of a breather to take some Nzori mineral water, I will deal with Dashan Joshi's question, whom should we connect with in case of more questions? Dashan, I have put our contacts for Sbg Securities in the chat. You can contact us on the The phone number is 0312-224972, or you can send us an email on sbgtrading@stanbic.com. We are also, our physical offices are on 4th floor at Crested Towers. So you can reach out to us, and we will be able to deal with all your questions. Kisarine wants to know what unit trusts are. And in brief, unit trusts pool funds together. So in case, Rin, you have your 100,000 and Dashan has 100,000, Salima has 100,000, unit trust providers, Sbg, like Sbg Securities, will pool that 100,000 or all that money together, and we will go to the market as one. Hence, as one, taking all that money along, as the entire bulk of that money, taking it to the various investments. So I mentioned that that's an indirect way through which you can invest in government securities, because essentially these unit trusts, some of the products or some of the assets that they invest in are government securities. So it is an opportunity, especially for people who want to diversify their portfolios or their investment streams. It is an opportunity that they can take up, and we are able to break that down further for you at Sbg Securities. My panelists, I'm back to you. There was a question here. Stephen, Samuel Senfuka is asking, why is the withholding tax on treasury bills and bonds different? Why isn't it one uniform withholding tax between treasury bills and bonds?
Thank you, Samuel, for that question. So you're right. So the withholding tax on the government securities, that's for the T-bills, 3 months, all the way up to maturities of 10 years is 20%. While on the longer dated tenors, that's up to 20 years, it's 10%. So I'll attempt to answer why, but the longer the period is, you need some incentive for you to lock up your money for that long. So for someone who is going to commit money to lend to government for 20 years, they will need some extra incentive. So the rate is lower there to encourage more participants to invest in that space. In a nutshell, that's the reason I would give. But I would compare it. So it's very similar in the other countries as well. The shorter securities, the withholding tax is slightly higher. Some of the countries, for instance, Kenya, that have a longer security for the infrastructure bond, there's no withholding tax there. So just provide an incentive for investors to invest in that longer space. Thank you.
Madam Roslyn, Jen Nachimo is asking, will it be the commercial bank to alert the individual that the investment is above 200 million and that the individual qualifies to be in that competitive space that you spoke about? Or is it upon the individual to know these things so that they know what rate they have to ask for the rate as per the regulation or the rules for competitive bidding?
Yes. Thank you, Nachipuri. Buying these government securities, we told you can either buy as a competitor or a non-competitor. So if you have 100,000 to 200 million, just approach your commercial bank. You don't have to hustle with anything. Your money will be invested automatically, and the interest rate will be determined by the market forces. Now, you want to buy above 200 million, meaning you are competing, then you approach your commercial bank. They will assist you in investing. But first of all, we want to give you knowledge, because knowledge is power. If you know what you want, you can even go to the market, to the commercial bank, and ask them, I wanted to put my money, but I don't want this 10%. I want 12%. Maybe I can look for something else better than the investing in government securities, which can give you. So we are giving you information to equip you so that you look for better investments. Yeah, much as these government securities are free and nice, it is up to the customer. They are very safe. You are going to relax, your money will be there, but it's up to you to decide. But once you decide to go in, nothing will lose. So the commercial bank can help you determine, but also you go to the website, find the information, see how the market is moving, see whether you can go with that price that is at the market that time, or you are not able to go to it. So either you determine for yourself, you tell the commercial bank what you want, or you ask the commercial bank to assist you. Thank you.
Okay, Madam Roslyn, I'm going to remain with you to answer this question. Godwin Muhwezi is asking, can I reinvest the interest to earn more interest? And if I want to reinvest, do I have to buy in the primary market or over the secondary market? And is it automatically topped up on my other investment so that I can earn more?
Thank you, Muhwezi. When you are investing your securities, as we said, the time you come in, the price you find there, it is the price you are going with. And it is not going to change until it has matured. So when you are buying, you can always buy. Every time you go to the market and you find a security, buy. But it has its price. Every time you come, there is a different price, depending on how the market is reacting. So you cannot, you add it on, it's maturing at different time, and it has a different price. So prices are always different, but at the end of the day, they add up. Let's say I've been investing 10 million, and the total I have now 500 million. Okay? It is there 500, but invested at different times, and actually it even helps you. If you want to withdraw one, you withdraw the one that is closest to maturity so that you don't lose a lot of money. Thank you.
Thank you very much, Roslyn. Stephen, Caroline is asking, Caroline Papok, are the interest payments made every June and December, or is it the 6th month from the month of first investment? I think she's talking about the coupon payments.
That's right, yeah. Thanks, Caroline. So the coupon payments are much as we say semi-annual. So it's from the point, like you've already said towards the end, from the point you invest, so every 6 months from the point you've invested, not necessarily January to June and then December. So if I come in today, 31st March 2022, the first coupon payment is going to be September, so after 6 months. Thank you.
Okay, thank you for that. Madam Roslyn, you, in your explanation of how the auction works, at higher RST is asking, so the client or the investor in this case has the capacity to negotiate interest? Is that how this the auctions work?
Actually, I don't know whether I should call it negotiate, but you have a right to say, I'm putting my money for this period, and I want this interest rate. Let me use the crude word. I think you are dictating. If you are not putting this interest rate, don't take my money. So there are other people also who would come in and they ask for that price. So Bank of Uganda is going to look for the customer who is requesting for the lowest interest rate to become their first customer, number one, until the money that is already offered is over. So it is up to you to dictate, no, don't touch my money. I have better issues. If you're not putting my 12%, whatever.
Yeah, maybe if I could just add to that one. So it's an auction, so you come in with different bids. It's like if you're bidding on an item, all of us here can put in a bid. We don't know what the other person has put in, but from where we stand, we try to raise money for government at the lowest cost possible. So we'll take from the cheapest and so on until you fill the money like we illustrated. So you're not really dictating. You come in with your bid based on what has informed your pricing, And then depending on who everyone else is pricing, either you succeed or not. Thank you.
Thank you very much. Madam Roslyn, Joyce Namlondo is asking, does she have to always ask for the statement, or is there a schedule for sharing their CDS statements?
Your statement, you can always access it through your commercial bank. So you must come and ask for your statement, then we give it to you. And we must confirm you are the real owner of that statement. So we don't just give, we give you on request.
And maybe, Stephen, I'm going to put this to you because I see a lot of people asking whether Bank of Uganda is being more intentional about putting this information out there, since a lot more people don't understand or have the appreciation of these investments, yet more people can benefit. So maybe you could highlight what is Bank of Uganda doing in that regard.
Yeah, thank you, Salma. So this particular one is an initiative by NSSF. It's their financial literacy initiative. But at the Bank of Uganda as well, we have a financial literacy program. Before COVID, we would do countrywide sensitizations, different districts, but COVID sort of interrupted that. That should resume soon. So we do have a financial literacy sensitization program of our own, similar to what's happening here. Thank you.
Okay, thank you. I see Joseph Mary. A lot of people are asking, why doesn't NSSF invest on their behalf? And still from a point of knowledge, I know NSSF does invest some of the monies that our members are saving with it in government securities. You can always refer to the annual members' the annual reports available on the NSSF website. You will note that they do have an allocation to government securities. So I am right to say that NSSF is already investing on your behalf, or for members on their behalf in government securities.
Yeah, maybe on that, Salma, if you can just quickly add. So for the existing members, like myself, who have not yet reached the midterm access age, so NSF does invest our funds, and their biggest investment space is the government securities. On the longest tenor, and you can understand why, because they can hold the money for longer until certain people qualify. But they do invest in other space. So when they do declare that annual interest that we get paid on what we're saving, it's as a result of what they've earned out of the investment. Thank you.
Okay, thank you. Eve Namisango, who regulates unit trusts. The unit trusts are regulated by the Capital Markets Authority. And I think what I forgot to mention is that the unit trusts are very structured, because as the regulator, Capital Markets Authority, stipulates, there is need to be an investment manager or a fund manager. The money that has been pulled together by the various members. Then there is a trustee who represents the interests of the members on a day-to-day, since we recognize that most of the people out there, or most of the members, are busy. So you need to delegate that work to someone who is regulated and trusted. That's the trustee. Then there is also a custodian who holds the assets. So it is a very structured form of investment, all aimed at ensuring the safety of your investments or of your money that you have put in unit trusts. I'm also going to deal with Peter Walwambe's question. Do I need to be a Stanbic customer for Sbg to be my broker? No, you do not need to be a Stanbic customer. We are open to any person with any bank account or bank client to be our customers as Sbg Securities. Yes, so in closing, I'm just going to get one more question, and then I will be able to start, or we get some concluding remarks, and we close off the discussion. Madam Roslyn, Ruth Namawanda is asking, can she open a joint CSD account that's for two people?
We talked about it, and Ruth, you can open a CSD account for 2 people. But first of all, you must have an account in a commercial bank reading the same names, because when your money has matured and we are sending it back, it shouldn't bounce back to Bank of Uganda. It should go on the exact account which is holding the 2 names. Thank you.
Okay, thank you very much. Rosalind, Stephen, I want to give you maybe about 30 seconds for any last communications to our audience this morning. Rosalind, I'll start with you. Ladies first.
I'd like to thank NSSF to give us this opportunity to talk to you people. And we are trying to pass on the message to most of us, our customers, but we have a website where you can access Bank of Uganda website. There is information, there are communications on the website. And in case you are near Bank of Uganda, anywhere, up country, we have Masaka, Mbari, Mbarara, Fort Portal, all those, you can go there and ask, get information. Or you come to Bank of Uganda, counter number 14, we have, everybody can come, the public can come and ask as many questions as you want. So that is all. We wish you well, and please invest, so that in future you don't regret. And if you are young, start investing at as early as you start working, and you will never regret. People who have done it have not regretted, and there are very many examples. When you come to Bank of Uganda, I think we shall talk at length. Thank you very much.
Thank you, Madam Rosalind. Stephen?
Thank you. I just add my voice to thank NSSF for the financial literacy initiative. I think it's been a timely intervention, given that midterm access has just been paid out. We do hope this session has helped members and will guide their investment decisions better. So do consider government securities for the benefits we've highlighted. Risk-free, the return is relatively good, and they're very liquid. Whenever you need the money, you can get it out. Thank you all for, wish you all the best.
Thank you, Stephen. Thank you, Rosalind. As I conclude the session, I would like to thank our audience and thank NSSF for organizing this. In closing, I think one of the key takeaways is the fact that as we access, or as we get our incomes, as we access our midterm savings, rather than putting all the money in the usual forms of investments that we have been used to, government securities, unit trusts, and other avenues that we can utilize to actually recognize and get to the journey or create wealth. So please reach out to Sbg Securities. We are a trusted investment advisor. We will help you break down some of these complicated terms. There was a lot of questions about if I invest 5 million, if I invest 100,000, what sort of return would I look out for? Please contact us at Sbg Securities. We will be able to give you those calculations and help you decide, make the right decision, depending on what sort of risk appetite or what you want to do and your aspirations are. So please reach out to us. I did indicate our contacts and location of our offices in the chat. So please reach out, and we look forward to walking your investment journey with you. Thank you very much. Jacqueline, back to you.
Thank you so much, Salima. Thank you so much, the panel, Stephen and Rosalind. We thank you so much for your time, for taking off these hours to teach our members on how to invest in government securities. So my take home today, which I need to share with people, is that diversification is key. So if you can, please diversify your investment, and then track your investments. Like Rosalind mentioned, track your investment wherever it is, whether it's in, you have a real estate, please kindly go out and have a look at it. Know that your land is safe, know that your business is doing well. know that the money you used to buy government securities is actually there. Track, get statements. Then my other take home is that we need liquidity. So you need to invest in assets where when you need cash, it's easy, because anytime you could maybe fall sick. And moreover, when you're old, at old age, that's when we need liquidity more. So invest in assets. When you say now I need, say, 200 million for treatment, you can easily convert that asset into cash. That's my take home today. So thank you so much, Renzori, for the water that has kept us hydrated during the session. You've always sponsored drinking water for all our webinars. Thank you so much, the Financial Literacy Unit. Thank you, NSSF, for putting in money to educate the public about financial literacy, for wanting your members to be financially independent at retirement. Thank you so much, the financial literacy team. Thank you, Mr. Headmaster. Sir, you're currently on leave, but we thank you for the effort that you always put, and the Council of Ladies, as you always call us. So from us, we wish you a very good afternoon. Bye for today. Thank you.